AppLovin is a vertically integrated advertising technology company. Its core business operates a demand-side platform, DSP, called App Discovery for advertisers, and a supply-side platform, SSP, called Max for publishers. A key part of its growth strategy is its AI-based advertising engine, Axon 2. Business model shift. In February 2025, AppLovin announced plans to divest its lower-margin mobile gaming studios to focus exclusively on its higher-margin ad tech platform. Its revenue is primarily driven by its DSP segment. Industry position and competitors. AppLovin competes with other major software and ad tech companies. Its main peers in the digital advertising space include The Trade Desk, TTD, and Magnite, MGNI. A comparative analysis of key financial metrics against a broader set of software industry competitors is detailed in the valuation metrics section below. Financial health. AppLovin has demonstrated strong financial performance, particularly in revenue growth and profitability, as of its latest reported data. Metric value revenue, TTM, $574 billion revenue growth, YOY, 40.25% versus 13.98% industry average. Net income, TTM, $2.51 billion profit margin, 42.35% operating margin, TTM, 76.08%, return on equity, ROE, 253.77%, total debt, $3.51 billion, debt-to-equity ratio, 300.82%, operating cash flow, TTM, $290 billion. Financial analysis. The company is experiencing exceptional revenue growth and high profitability margins. Its return on equity is also remarkably high. However, it carries a significant amount of debt, which is a point of financial risk. Valuation metrics. AppLovin's valuation metrics suggest a premium pricing compared to the industry, reflecting high growth expectations. The table below compares it to key software industry peers. Company PE ratio, PB ratio, PS ratio, ROE, AppLovin, APP, 62.39, 2.2, 48, 23.30, 69.21%, Salesforce, CRM, 42.22, 4.25, 6.78, 2.53%, Adobe, ADBE, 24.15, 13.97, 7.32, 13.78%, Intuit, Intu, 63.97, 10.86, 12.21, 14.81%, industry average, 125.8, 12.76, 16.23, 4.52%. Other notable valuation metrics for AppLovin include forward, PE, 50.51 PEG ratio, 5-wire expected, 1.84 enterprise value, EBITDA, 71.34. Valuation analysis. AppLovin's PE ratio is below the software industry average, which could suggest growth potential. However, its price-to-book and price-to-sales ratios are substantially higher than peers, indicating that the stock may be trading at a premium based on its sales and book value. The high ROE signifies efficient use of equity. Growth potential. AppLovin's growth strategy is multifaceted and shows significant potential. International expansion. The company is strategically expanding its Axon advertising technology into international markets in Europe and Asia, with a full rollout planned for 2026. This move vastly enlarges its total addressable market, TAM, and reduces its reliance on the U.S. market. Expansion into non-gaming verticals. A key growth driver is the rapid expansion beyond mobile gaming into verticals such as e-commerce, financial services, healthcare, and automotive. Analysts at BTIG project this could create a long-term revenue opportunity of $6.117.1 billion. Financial projections. BTIG analysts have raised their forecasts, projecting 2026 revenue and EBITDA of $8.19 billion and $6.84 billion respectively, driven by strong non-gaming momentum. Risk factors. Investors should be aware of several material risks. Legal and regulatory risks. AppLovin is facing a securities class action lawsuit alleging it profited through inflated installation numbers and misleading profit figures between May 2023 and March 2025. This could lead to substantial legal costs and reputational damage. High financial leverage. The company's high debt-to-equity ratio of over 300% indicates reliance on borrowed money, which can be a concern in a rising interest rate environment. Valuation and competitive pressure. The stock's high valuation multiples, PB/PS, make it potentially vulnerable to market revaluation. It also operates in a highly competitive space with established players like The Trade Desk and Google. Dividends and returns. AppLovin does not currently pay a dividend, as indicated by its 0.0% dividend yield and 0.0% payout ratio. The company has generated substantial returns for shareholders, with its stock price up 387.86% over the past 52 weeks, significantly outperforming the S&P 500's 17.90% gain. Market sentiment. Analyst ratings. The view is generally positive. In June and July 2025, firms including Scotiabank and Piper Sandler initiated or reiterated overweight or outperform ratings. BTIG analysts have maintained a buy rating and raised their price target to $664. Institutional ownership. 69.58% of shares are held by institutions, indicating strong confidence from professional money managers. Short interest. As of September 15, 2025, 5.05% of the float was sold short. This is a moderate level, indicating some skepticism in the market but not widespread bearishness. Corporate governance and ESG risk. AppLovin has a low total ESG risk score of 16.3 out of 100, as rated by Sustainalytics, indicating negligible ESG risk. Controversies. The company is currently rated at a moderate controversy level, 2 out of 5, which likely reflects the ongoing securities lawsuit mentioned earlier. Customer base. AppLovin's customers are primarily mobile app developers. Key segments. Its main customer segments are hyper-casual game developers, developers from other app categories, and established gaming studios. Customer needs. These developers use AppLovin's platform for user acquisition, monetization, and data analytics, prioritizing return on investment, ROI, and ease of use. Insider and institutional data. Institutional ownership. As previously stated, institutions hold 69.58% of shares. Insider ownership. Insiders hold a significant 18.77% of the company, which can align their interests with shareholders. Insider trading. Detailed data on recent insider trading activity was not available in the search results at this time. Additional factors. Innovation and moat. The company's competitive advantage is closely tied to its proprietary Axon 2.0 AI-based ad optimization technology, which is a key driver of its growth. Macroeconomic impact. The company's global expansion efforts may help diversify its exposure to any single economy, though the digital advertising market is generally considered cyclical. Key takeaways and uncovered areas. AppLovin presents a compelling but high-risk investment case. Its strengths are exceptional revenue growth, high profitability, and a clear strategy for expansion. Major risks include its high debt load, ongoing litigation, and premium valuation. This report could not cover all requested areas due to data availability in the provided search results. Information on the following is not available and would require further research. Technical analysis, support, resistance, moving averages. Detailed M&A history and specific acquisition targets. Supply chain exposure, tax and accounting practices, effective tax rate. Employee and labor risks, turnover rates,